What's your sense of the market direction at this stage?
Well, the thing about investing is a wonderful job, but unfortunately it also never gives you a break, and the sort of late July, early August was certainly a busy period in what was supposed to be a quiet sort of weeks. I personally think it's been actually a very sort of positive cleansing moment for Asia, for emerging Asia. What happened with the yen is probably a very positive base going forward for Asian risk assets. In our perception, a weaker and weaker yen was always sort of the big tail risk out there. And while none of us knows the future direction of the yen, it's probably fair to say that we have removed a major part of the tail risk. It's unlikely that the yen will depreciate dramatically from here, given what has happened and what the responses have been. And so once you remove a tail from a distribution, your sort of middle outcome should move a bit more towards the positive, right? And so in some ways, this big yen event it has given probably an opportunity for people to look at arresting dollar strength, given the Asian currencies a moment to shine. And we're seeing the renminbi very notably trading much closer to its fix ever since that event.
Mm-hmm. Within non-Japan Asia, where would you be putting your money? Where do you think that the best opportunities for investment are right now?
Well, we continue to actually quite like the opportunity in the 8 shares, the Chinese companies listed in Hong Kong. Extremely low valuations, positioning the lowest it's ever been, at least back on the Goldman data from the end of last year. And the Hang Seng was briefly back to where it was at the end of last year. And rising payouts. So Hong Kong listed companies have really attractive dividend yields at this moment, and that's also where a lot of mainland Chinese investors seem to be putting their money through the southbound connect. So we quite like the value and income opportunity that you get through 8 shares listed in Hong Kong. And then the other space that we quite like is Korea, where Korea has published further details in its Value Up program. It now has a website. I actually really encourage everyone to just click on the Korea Stock Exchange website and look at that database where companies can submit a 30-page slide deck on how they're going to bring up return on equity and their share price. That's actually really quite revolutionary and mirroring what happened in Japan over the last few years. And then the third market that's interesting, coming back to your earlier point, is that as a less strong US dollar provides policy space for Asian central banks, the Philippines and Indonesia look like the 2 countries where we could see a little bit of rate cutting, enabling quite a bit of performance in the case of Philippines, yield compression in the case of Indonesia, a couple of the equities that have been quite dislocated following the very long power transition on February.